All right. Good evening, everyone. It is 7 p.m. Eastern. Go ahead and drop those questions and comments in chat. So, guys, I do appreciate the comments on Rex. But if we could, I don't. I like to. I know saying I like to keep things professional. Some people might laugh. But I like to keep things professional. I like to kind of divide the personal life from what we do here. I want to help you guys. I want to get you ready for tomorrow. Now I do 100% appreciate the well wishes. I did have to put Rex down. Wasn't easy. That was on Friday. I do appreciate all the well wishes, and please understand I do really appreciate it. But I would like to keep things stock related. I don't like to mix personal life and business. So thank you again. I appreciate that. But yeah, unfortunately, his back was broken and I did have to put him down. So keep Rex in your prayers for me. So that being said, let's get started. S&P futures gapping down a little bit right now. Nothing major, only down 0.18%. So pretty much unchanged. And kind of going back to review last week, the S&P 500 was up 1.5%. NASDAQ was up 2%, which is kind of impressive, really, considering the fact kind of the beating that Tesla took. It really shows you, when you've got a company. Remember, the indexes are based on market cap, et cetera. And when you've got a behemoth in the NASDAQ like Tesla that took the beating, we will talk about that a little bit later. But kind of surprising, really, that the NASDAQ was still up 2%. But that just shows you the resiliency, the bullishness of the market. A lot of people have asked me, what's your take on the whole Trump and Elon girl fight, for lack of a better term. I will talk about that later, but kind of starting at the top, the Dow was up 1.1%. So another green week, very strong week overall, kind of recapping there. And then, big points of interest. And let me get my screen shared here. The CRCL IPO, ended up being very successful overall. I don't even remember. It was like 10x oversubscribed. So massive oversubscription to the IPO, which is a big reason why, I think it was originally priced. Someone remind me. I think the IPO was originally priced in the 30s and it opened at 64. So basically opened up 100% above the initial pricing. But that goes back to how bullish the markets are, extreme demand for CRCL. And, I do want to kind of jump back to this because the other question I got a lot was, how do you trade IPOs? Somebody says 31. That sounds about right, Jake. I think it was right. It was somewhere around $30. But thank you, Jake, for that. There's two ways that I recommend approaching IPOs. And, and I shouldn't, when I say this is kind of it isn't like this is my IPO strategy. I want to be clear. Most people that are, smart about trading approach IPOs like this. So the first approach, and I'm sure this won't shock any of you, is the RCT. Now the key component is it's got to be a really strong IPO like CRCL. The RCT does not apply to an IPO that opens lower. Okay, this is specifically related to something like CRCL, because if you look at CRCL, it fits the criteria for an RCT because what did it do? As soon as it opened, it went straight vertical. Now, remember, the very first prints were in the 60s, okay? So think about that. If the IPO was originally trading in the 30s, or originally priced, okay, so let's talk a little bit of mechanics here. If the IPO was originally priced at 30, that was where all the banks, said it was going to open. You got to take that into consideration when the thing, once it starts trading, it's trading in the 60s. So you've already got, a straight vertical move from the 30s to the 60s. Does that make sense? You guys get what I'm saying? Because you might be looking at the candles and be like, Tim, it never traded in the 30s. You're right. It never traded in the 30s, but it was originally priced in the 30s. So hopefully that makes sense. I try and keep things simple here. I try not to get too advanced, but hopefully that makes sense. So 30 to 60, then it continued vertical into the 90s. Okay. So straight vertical move, basically 30 to 90. Think of it like a penny stock going from 30 cents to 90 cents. We see that every day. Or a penny stock going from $3 to $9 or something like that. So similar move, straight vertical, no pullbacks on the 5-minute. And then it put in a 5-minute RCT at basically 90 and 85. Now, that's a lot of range. I understand that's a lot of range. But if you're trading a day one IPO, you got to give these things some breathing room. So then if you notice, about 1:30 p.m., it broke the top of that initial red candle and spiked, almost to 100. So that would be kind of the first initial approach to the RCT. Now, the other way, and my favorite way to trade IPOs, and if you go to the YouTube, I've got, probably 5 or 6 videos explaining my, safer IPO strategy. Now, this is the strategy that, again, I didn't create this. I didn't innovate this or any of that. Everybody uses this. And you're basically looking at the break of the day one high. Because at the break of the day one high, you've got several things going on. Number one, anyone that shorted this IPO on day one. Now, FYI, someone's going to say it. Someone says you can't short IPOs. You can. Now, you got to have the right broker. I want to say most people, especially most retail traders, can't short IPOs on day one. Now notice what I said. Most retail traders. Institutions, they can short them all day long on day one. And if you've got the right broker, you can short as a retail trader. You can short on day one, but it's a pretty exclusive list of brokers. You got to have high minimum, high minimum for deposit. You're not going to be able to short a day one IPO at Robinhood or Webull or anything like that. Okay. So they can be shorted on day one. Just 99.9% of you probably can't. So back to the point of the break of the day one high, and it basically happened at the market open. Shorts that shorted on day one get squeezed. You've got simple, just bullish price action. I mean, if you bought the day one IPO and now it's breaking out on day two, you're probably going to buy. You're probably going to add more to your position because you're adding to a winner, which is smart trading. So you're adding to it. You got shorts covering, which is buying. You got people that bought day one adding to their position, more buying. And then you simply have a bunch of people that missed it day one. I mean, think about the psychology. They missed it day one, and then they're like, look at CRCL breaking out, So they pile in. So you get that big rush of volume, and that would be the safest way. And this occurs whether it be day 2, day 3, day 4, day 5. But look for those levels, and you can see once it broke right where my crosshairs are. Once it broke the day one high, it was off the races to 120 plus. So now I want to be clear. That is the RCT, okay, only applies to straight vertical stocks. And someone mentioned, FOMO kicks in. Jake, exactly. Jake, I like you. Jake, I don't know if I know you. Maybe I'll meet you someday. I like you, Jake. You're smart. FOMO buyers, etc. So anyway, the RCT only applies if it goes straight vert after it starts opening and especially if it gaps up above the initial offering price. And again, all of these, both these strategies I talked about on webinars on Thursday, on Friday, etc. Okay, so this isn't hindsight stuff. On the tape, recorded, going over these exact strategies in webinars. Okay, so that being said, looking ahead to next week, not much out for earnings, but we got 3 really interesting ones. So we have the RCT is the purple lines right there. So again, guys, I would recommend maybe going back to last week. The purple lines are my lines. Again, it's the first red candle after the initial parabolic spike, and it's that candle right there, and you use the top and the bottom of the candle for your entry and your stop loss. So back to earnings, we only have 3 that I really would have you keep your eye on. GameStop on Tuesday. Should be volatile around earnings. So we got GME on Tuesday. Wednesday, we got Chewy. Okay. Chewy has been a volatile stock all the way back to the pandemic. CHWY. And then we got Oracle on Tuesday as well, ORCL. And then Adobe on Thursday. But we are kind of coming out of the end of earnings season. So those are kind of, we're really reaching the tail end of earnings season. So again, GameStop on Tuesday, Wednesday, Chewy and Oracle, Thursday, Adobe. And there are more, but those are kind of the main real kind of interesting ones coming up this week. Then on the calendar, we got Tuesday, the NFIB Small Business Optimism Index. Wednesday, we got CPI coming. Definitely watch Wednesday on CPI. Thursday, the PPI, and then Friday morning is consumer sentiment. And also something definitely keep an eye on is Apple's developer conferences this week. So if you trade Apple, definitely be keeping an eye on the developer conference. And then the other thing I want you to do, and this is probably, because, obviously Apple high priced, etc. But the reason to keep an eye on the developers conference is we get a lot of these like small companies that are either mentioned by Apple, which is rare. Apple keeps things pretty close to the vest. I actually respect Apple for that. Apple doesn't do any of the sketchy stuff, but they have mentioned partners in the past at these developer conferences, but it's rare. It is rare. Now, the other thing you want to look for is you're probably, and this happens whenever you've got these events with Apple, is you're going to see these penny stocks that try and ride the coattails. So they'll issue press releases that are similar to the stuff that Apple is announcing. They will vaguely mention, they will try and like make it sound like they're partnering Apple. You'll see a lot of these small tech plays. They'll say we have partnered with a large phone supplier and stuff like that. So keep an eye out for those all through this week because of the developer conference. They've been some great runners. I think of, Liquid Metal was a great one in the past. There's been a few other very solid day trade opportunities. Remember, these sketchy penny stocks are trying to ride the coattails of the developer conference, so just day trade them. But we've seen, massive runners of companies playing that recipe. So just be running your news feed, or even more importantly would be to have breaking news. Okay, breaking news will be all over it. Which, by the way, I didn't see this. Speaking of breaking news, one to watch for tomorrow. I didn't see this till a minute ago. Archer, ACHR, one of those flying car companies. ARK Invest, which I'm sure all of you guys know ARK Invest, Kathy Wood's company. I didn't realize that. She dropped a bunch of money. Kathy Wood has 25 million shares of Archer. So Joby kind of sold off last week, but Joby's been on a run. Archer, those are the two kind of mid-cap names in the flying car space. But I didn't realize that Kathy Wood bought a bunch of shares. So yeah, let me look at the calendar. Yeah, we got good news, China tariff-wise, and I think that's it for the calendar, okay? So let me jump over here, get back to my agenda, and so kind of going back to the Musk and Trump feud. Listen, I think that this is just going to create a massive dip buy opportunity in Tesla. I hope the feud continues, and I hope that Tesla sells off even more, because we know what's going to happen. You know, I predict this now. You can write it down, 7:15 p.m. on Sunday, June 8th. Whether it be in the coming days or a week or two, Elon and Trump are going to kiss and make up. Everyone's going to forget about this news, and you'll look back and be like, man, I wish I would have bought some Tesla during now again, my hope is the feud continues a little longer to push Tesla even lower, to set up even better dip buy opportunities, because once they kiss and make up, which they will, they're both a couple high school girls right now, you know, talking behind each other's back. They'll make up, and when they do, Tesla will be a rocket ship and amazing. Like I said, I hope it pushes lower. So, I mean, pretty wild that Tesla was down 14% the first day of the feud. I mean, that's a massive sell-off. That's $34 billion in market cap that came off of Tesla because of a Twitter fight, like a Twitter feud. Okay. Pretty incredible. Okay. A Twitter feud cost $34 billion in market cap loss, but hey, whatever. So anyway, look for the pullbacks. Oh, and the robot news. We got the Tesla robot coming and the robo-taxi. I've made it very clear. I'm very, 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 very bullish. Very bullish. Okay. Tesla and the overall markets. Robo-taxi is going to change the world. Robot's going to change the world. He's already changing the world with Teslas and Twitter and SpaceX, etc. So keep an eye out for headlines on that as well. I'm going to jump over. Man, I'm running a little long tonight, talking Elon and Trump. Oh, some of you guys asking for the watch list. Let me post it again. Whoops. StocksToTrade/watch list. It is free. It's every Sunday. Again, usually what I do on the weekend watch list is I go over mostly, day trades for the kind of, mostly the next day, as well as usually I throw in a couple swing ideas. There was one swing idea this week. Oh, speaking of the watch list, man, how about in these videos, who remembers 2 weeks ago? The trade plan on SBET. Now, remember, 2 weeks ago, the next day was Memorial Day, but the plan was valid on Tuesday. We absolutely crushed SBET, both on the watch list and on this live stream. And then how about BMGL last week? Oh my goodness, BMGL last week. Woo! Back-to-back weeks, the number one stock that we went over on the Sunday night live stream hit the exact price levels we looked for the following morning and absolutely went bananas. So I don't know if I can keep the streak alive, but I'm going to jump over to the watch list feature. Okay. And we'll break this down. And then I do need to run. I have an 8 p.m. Webinar. And actually, I'll give you guys an invite to that 8 p.m. webinar if you want. So EYEN, I want to kind of jump back on EYEN and go over the Thursday night squeeze report. So it's kind of funny. A lot of people, like last week, I saw some people chattering about, being able to predict short squeezes. Listen, nobody's better at predicting short squeezes than me. Why is that? I was 95% a short seller for the first 10 years of my career. Then in 2016, the market shifted. I basically quit short selling and I started trading the other side, trading the squeeze. Now, a lot of people, I saw some chatter, they're like, oh, they saw my scan and they're like, oh, all it does is look for simple criteria. Number one, simple is good. And understanding the squeeze point and real-time short interest is completely different. Now, if you guys had the Thursday night squeeze report and the accompanying video, I broke it all down on EYEN at 485 as the squeeze point. Now, this was Thursday night. Now, I will get to the trade plan for EYEN tomorrow in a second, but it's just incredible how these squeeze points play out over and over and over again. And Thursday night, EYEN broke 480 and went to 6. Then Friday morning, EYEN broke 480 and went to 5+. And then the trade plan that I wanted everyone to focus on, and again, if you watch the Thursday night video, you know this, was the Friday afternoon squeeze. So even after breaking that 480 level twice, post the report, it still had a third leg in it. And when it broke 480 on Friday afternoon, went $1 a share higher, almost exactly to a T as predicted 20 hours before. Now, I'm not bringing that up to quote unquote rub it in, okay? Like here it is. I even said right here, this level is valid into the next afternoon, okay? Now, I'm not saying this to rub it in. I'm telling you, if you know how to calculate real-time short interest and use a simple scan and understand short seller panic points, these are the most reliable, most predictable trades out there. Short squeezes, guys, it is like they're the layups. Like if you think about like a three-point shot or a free throw or a jump shot, now there isn't one every day. There isn't one of these every single day, but we get about 2 or 3 a week. But they are the absolute, complete, total layups. I mean, and again, the week before, we had ALZ, ASST, KDLY, okay? All of these, the win rate on these squeezes is absolutely ridiculous. I mean, I had RGC at $15 a share as a short squeeze. A lot of you guys know RGC went to $900 a share. Like, if you understand how to do it, and that's why I was like, people are like, oh, it's just this simple scan. I'm like, get the hell out of here. It's all Dunning-Kruger. Like, one of the things that drives me nuts, and you guys got to really watch for this. Are you familiar with Dunning-Kruger? Like, if you're in a chat room, okay, you got to really watch for this. You got to really watch for this. Because if you're familiar with Dunning-Kruger, what happens in so many of these chat rooms is there's somebody that knows just a little bit more than everybody else. They know just a little bit more than everyone else. And now, because of that, they've been trading like a month or 2 months or something, but they know a little bit more than like 90% of the people in the chat room. And now they're right there at A. Whoops, let me go back. Actually, let me zoom in on that one. And I'm telling you got to be really careful with this if you're in any trading chat room. Because what you're going to find is that the majority of the people that you're listening to are at A. So they have a little bit of knowledge, but they have a ridiculous amount of confidence. And because the fact that they know a little bit more than you, okay, you're like, oh, this guy knows more than me. and they have such a ridiculously high level of confidence. You look at them and you're like, oh, I should listen to this guy. And it's really dangerous because most people that you're going to find in any chat room, whether it be one of mine or anybody's, are at A, okay? And they haven't been to B, C, and D like I have, like Tim Sykes has, okay? And they never make it to E, okay? Now, when you've been trading decades like I have, you've done every mistake thousands of times. Okay, you've made every idiotic mistake, maybe tens of thousands of times. You go through the slope of despair, and you eventually get to E. Now, what I want you to notice is the confidence level for E is still way lower than A. You guys notice that? Notice how even at A, even after 20 years, your level of confidence still doesn't match the guy back at A. Because at the end of the day, as a trader, you apply all of your methods and your processes and you go through all of these steps and you do everything, but you still don't know it all. Okay. Like I'm never going to sit here and be like, I know it all. That's why my confidence is at E in the middle. Meanwhile, the guys you're listening to are probably up at A simply because they know a little bit more than everyone else in the watch list. Okay. Or in the chat. So let's go over EYEN for tomorrow, and then I got to get out of here. Just 1 second. Let me grab something here. So back to EYEN, very similar to SBET and BMGL the last couple days or the last couple weeks. Squeezed on a Friday, held the majority of its gains. So because of that, like if this can push through that basically 523, the low fives area tomorrow. Now remember, don't trade it if it gaps down. Wait for it to push through the move. But if it can break that after hours high at about 5:30 p.m., at about 5:25, I think you'd have a very good risk on 5. So if it fails, stop out at 5. And then I think this thing could easily do 6+. Okay. So that being said, guys, if you are So I just put a link in chat. So a lot of you guys know about Oracle, okay? Some of you guys know about Iris. Some of you guys know about Flux. Some of you guys know about the RCT algo. By the way, all of you struggling with the RCT pattern, I now have an algo that actually does it all for you. So at 8 p.m., I'm going to be live over there. If you're curious about getting access to everything that I do, every live webinar, whether it be day trading, swing trading, long-term trading, short squeezes, Squeeze Master Pro is included, okay? If you want those short squeeze alerts, and I also teach you how to identify the squeeze. So my entire database of knowledge, over 10 years of mentoring traders, over 20 years of personal experience, every algo, every AI, everything that I do, feel free to jump over there at 8 p.m. It's free. Come on over, check it out, see if Traders Unlimited is for you. So, all right, guys. I did, like usual, I didn't get through everything on my agenda, but I got through 90% of it. So have a good night, my friends. And again, feel free to jump over at 8 p.m. Would love to see you there.